Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. First, to all of our American subscribers, I wish you a happy and safe Thanksgiving. Well, what did we learn this week? Or rather, what did we relearn this week following NVIDIA's superb results? The general rule is to buy in anticipation and sell on the news. This kind of market action has already happened in at least 6 of the last 20 NVIDIA quarterly reports, so I do not take any new information value out of this week's action in the stock. Well, maybe no information value may be overstating what transpired, but we'll see in a moment. The other news is that it seemed that Microsoft almost had the guts of OpenAI under its own roof. But things are reversed very quickly. Personally, I think to the benefit of Microsoft. First, if it had to hire much of the OpenAI staff, Microsoft would effectively be paying twice for Sam Altman's work. Second, they will not have to fend off the lawsuits which will most likely follow if many of OpenAI's staff did defect to Microsoft. Other than that, things have been steady as she goes, with the FANGs as the group generally heads higher, ignoring today's little hiccup, and they continue to lead the overall stock market. How long the FANGs can continue to do this in light of the very extended and outsized valuation, I don't know. But I would not turn my back on this group for a moment. Now, a reminder. If you enjoy FANG Friday, but consider yourself to be more of a value investor, kind of like I do, then stay with me till the end of the video to hear details about my free value investing seminar. Actually, almost a hyper value investing seminar that will be taking place in the new year. I will be covering an aspect of the stock market that very few people know much about, but which can produce spectacular gains. Spaces are limited, and you won't want to miss out. So make sure that you watch to the end of today. We already have a lot of signups, so if you're interested but haven't signed up yourself, stick around to the end where I will explain the sign-up procedure. Anyway, right now, we really need to take a close look at those FANGs and what has been going on. But as always, before I do, I want to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Let's start off with Amazon, which, well, you can see what's going on. It's struggling to break out here over its bubble price at 7.4 times book value. And I think may well do that because you can see here this little increase in the uptick in the earnings and fair market value line may well have enough oomph now to push on to its HB1, looking promising. Alphabet, I think, just continues to soldier on higher, and again, I'm looking for its bubble price. Again, 7.4 times book. Apple just is. You know, when you look at that stock, it's kind of now in a channel, isn't it? Bordered between the HB7 and the and what is really the HB6, which is 33 and 44 times book value. There. Not much is going on in the way of fair market value and earnings, which just been flat for some while. Now, indeed, it makes one wonder why the stock manages to hold up. However, it is And take a look at that market cap. It's almost back to the $3 trillion mark again. Now, NVIDIA, you will remember, I think, from last week that that bottom right here that you can see last week was actually sitting on its HB5. Okay, price, and but now this week we see that that isn't the case at all. Well, what's happened? We have a brand new balance sheet, and what's happened here is that the structural prices have been pulled down. Now, what happened here is that it almost looks as if NVIDIA kind of got on the wrong side of its HB6, again 33 times book, and said, oops, what are we doing here? And has sold off underneath. That, by the way, is very common when a stock has a long-term price trend, price pattern. And yeah, it got up to its HB7 momentarily, but it wasn't designed and meant to be, apparently. So this is not to say that it's still not going to go there. However, it now has to break out over the HB6 price, okay? Not sort of pushed there because of the balance sheet change, but it'll have to be actually moved there by the market. So watch this one carefully. Microsoft just continues to soldier on higher. Not much has transpired as far as a change in the outlook for the company. As I say, I think probably the good news for Microsoft is that it didn't manage to acquire all of the stock, at least of the staff of OpenAI. And but it, of course, will still get to use that work. However, looking at the HB2, which is 12 times book, was quite a bit of resistance earlier this year. It is probably going to take a lot of pressure to break that stock out. Meta does appear to have broken out now. It's been struggling for some while, but it's been moving, I think, steadily higher. And you can see that Zuckerberg has been successful in increasing the earnings outlook and therefore the fair market value. I think there is a very good possibility that we're going to get back up to its bubble price. I would definitely want to be holding this stock. Netflix just kind of continues on its own happy little way here. I had thought, remember months ago, well, back in 2022, when the stock bottomed pretty close to its super growth price, I said, look, when stocks do that, they often go right back to their bubble price, the point that they broke down. So that we had a sort of open field running there, and indeed that's exactly what happened to the stock. That was it, set back, and I thought that that was it. However, the stock broke out, but then, whoops, failed, and then on spectacular earnings and sales has busted out again and has just been steadily up virtually every day, whether the market's up, down, or sideways. That stock manages to get to move ahead. HB1, I think, is in the bag, and the question is anything further? Well, we'll have to wait and see. Finally, Tesla. Tesla, to me, I mean, the first thing is let's look at the earnings outlook, and therefore the fair market value continues to move steadily lower. The stock, to get to its fair market value, would now have to fall 70%. That's a long way down. The stock, to me, looks as if it's, I would call it dithering, indecisive trading. I would be very, very cautious of Tesla. Now, to briefly summarize what happened, well, That nice price recovery across the board continues. Both Amazon and Meta now look to be breaking out and thereby giving us a buy signal. There's probably no rush to get in, as we often get sort of those breakouts and pullbacks kinds of pattern. And that looks very much what may be happening here now. But very, very promising price action here. Alphabet, Microsoft, and Apple all appear to be in pleasant, if modest, uptrends, although Microsoft is now high enough and close enough to its next higher breakpoint that closer attention is warranted. Can it go higher? Or is it at a point where soon it will be running into strong resistance and reversing course? We're going to wait and see. Netflix is in a world of its own. Not one of the Magnificent Seven, but still a FANG. Its very recent numbers have given it a new lease on life above its bubble price. Just keep an eye on it when it reaches the HB1 price. I would still watch Tesla carefully. It's dithering at and above its HB2 price. That's 12 times book. Market sentiment may be with you right now, but its fundamentals are definitely not. Be aware of the risks in this particular stock and watch carefully. When a stock is in a push-me-pull-you condition, or what I call indecisive trading, I have seen such stocks go in all manner of different ways. As an advisor to my own clients, I have to admit to extreme uncertainty here. I frankly think that investors are gambling in this stock. NVIDIA is the only immediate question mark because, as it turns out, despite what things look like right now, it has not successfully challenged its HB6, that's 33 times book value, which you will recall was a 24-year extreme high before what I would call a short walk on the wild side, when it went one breakpoint further. I'm not saying that it can't do again, but until it breaks out, I cannot issue a buy signal for the stock. Now, the FANGs are at one end of the valuation spectrum, but they're expensive by any measure, almost hyper excessively valued. But what about the other end of that spectrum? Very cheap stocks do not get there by accident and require special attention. Our proprietary charting system can help you find stocks that are cheap, may have huge upside potential, but just like the FANGs, they require careful handling. We call these blue zone stocks, and not to be confused with blue chip stocks, which they may not be. And while we are not a stock picking service, we have pointed out blue zone stocks to our clients in the past, and some of these have exploded in price under the right circumstances. I'd like to take some time and show you how to use our SVA charts to find stocks that have this type of massive potential, while alerting you to the risks as well, which can be equally huge. On Friday, January the 5th of 2024, rather than having FANG Friday, I will be holding a free webinar for anyone interested in learning about how to find and handle cheap stocks with tremendous upside. I've used this method my entire career, and it has worked handsomely for me. If you want to learn more, you can sign up by sending us an email with your full name to info@strategicanalysis.ca. Spaces are limited, so sign up today. If you have already signed up, you should have received a confirmation email, so check your inbox. Now, if you don't wish to wait, but want access to our database of our charts, along with the suite of tools used to navigate the entire client website, go to www.strategicanalysis.ca/pricing. and sign up for a 3-month trial at a reduced rate. If you sign up before the webinar, we will make your first month free so that you can get an understanding of the charts before the webinar. I think you'll really like it. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.